Hey guys, this is KYT recording on a Sunday night, hoping to get this published on Monday before the stock market opening bell. I think it's important for me to make this video because stock market is tumbling, and a few of you have had a few questions on my older XEQT videos regarding on what you should do during this time, and I'm going to talk about what I'm going to be doing during this time. Before I continue, please hit the subscribe button, lightly touch the like button if you enjoyed this video, and I promise I will never sell you an investing course. Now let's get to it. These past couple of weeks have been rough, and you can see that in the NASDAQ and the S&P. The NASDAQ's been down 6.22%. Netflix has been down over 20%, and it doesn't look like it's going to get any prettier. If you look at the US futures, you can find that if you Google, it's on the CNN website, and it looks like we are going to start off pretty rocky on a red once again, and it's going to be pretty scary. And we can expect a lot of news this week. If you look at Tuesday, we got the Microsoft earnings, we got the Apple and McDonald's earnings on Thursday, and we got the Fed meeting on Wednesday. Lots of things to look forward to, so expect a lot of volatility, or maybe once Microsoft releases its earnings report, things might calm down or return green. We don't know. I don't know. I can't tell you, but there are a lot of things that could affect the emotions of the market. With that said, let's look at some of the comments I received in my last XEQT videos because they relate to how I plan to navigate this current situation. So Chris leaves us with a question: do you think now is a good time to buy XEQT? I recently transferred from WealthSimple Invest to WealthSimple Trade, but I'm thinking of holding off for a week before I buy. Now, of course, I can't really answer that question for you because you have different risk tolerance and I have no idea what you're saving for, but I'm going to answer more specifically my situation in the hopes that it might help you. In all my previous videos, when I talk about XEQT and my 100% in XEQT strategy that's in my TFSA and RRSP, my intention with this amount is that I basically never touch it. Unless there's an unforeseen emergency where I really need this money, I am never going to touch that money. Once I buy, it's going to stay there for the next 30, 35 years. So that's why this week, Wednesday night, I'm going to get paid. Thursday morning, I'm going to deposit an amount that I can afford to deposit based on the expenses I foresee myself having in the next couple of months and buy XEQT. That's my strategy. So obviously my approach is not necessarily the best approach for everyone. It really depends on your vision of these funds. Like, do you need this to buy a car at some point, a house? It really depends. And if you want a smoother ride, there are many methods like DCA, dollar cost average, meaning if you had $1,000 to invest this week, maybe you want to spread it across 2 weeks of $500, maybe 4 weeks of $250, maybe some other schedule. But by doing that, you lower your volatility. And there are other ways to do that. Instead of jumping into XEQT like me, like a madman for 30, 35 years of just buying and holding XEQT, you might want to go with one of the ETFs that they have with a lower stock allocation. There's 20%, 80% bonds on iShares. It's an ETF called XINC, and there's stuff in between, like XGROW is really popular, like I've mentioned in previous videos. So there are different ways, again, to get you a smoother ride. So Chris, I hope that helps, but if not, leave a comment. I'll be sure to go into more detail. On to the next question. Samir asks, awesome, this is a game changer for me. I've been trying to pick stocks, but it simplifies the process. How do you compare this to VEQT or VFV? Now, I think they meant compare. XEQT is from iShares and VEQT is from Vanguard, and they're both basically the same thing. They're both one decision ETFs. They're both 100% stocks, and their composition is similar enough that you should expect similar returns. So really choosing between them, you can just flip a coin. I love that you mentioned that it simplifies the process because it really does. The reason to buy these one decision ETFs is that they buy and sell different stocks within its portfolio automatically for you. You don't have to do this yourself. So it really is the ultimate peace of mind. Samir, you also mentioned VFV, which is the Vanguard S&P 500 Index ETF, which is a fine ETF. But if you go with the one decision funds like VEQT, you have global diversity. You have exposures beyond the S&P 500, which makes all of these funds, in my opinion, superior. But if you wanted to hold VFV with other stocks, you can do that. But again, if your goal is to simplify the process, get one of these one decision funds. It's super easy. And those were the two questions I wanted to answer in this video, and it's gonna be fun. A few days from now, a few weeks, hopefully not a few years, when the stock market is green and doing well again, to look back when it was on a downturn. But I'm in good spirits. I had 2 viewers leaving me questions. I'm feeling happy. But to end this video, I did want to talk about certain things that I disagree with in the YouTube space. So XEQT is considered a growth strategy because it doesn't pay much in dividends. And I think the passive income investors, people who really focus on dividends in their portfolio, they argue that it's easier to sleep with their strategy. It's easier on the heart. But I think it can be the case for us as well, because their argument is that they get regular income. So they don't have to randomly decide when to sell. They don't need to analyze that. They don't need to waste time, waste brain energy thinking about that. But again, I'm speaking to people who want to invest exactly like me, have a long time horizon. That decision is also easy because I am not selling for the next 5, 10, 20 years. I'm going to be doing the same thing I've been doing the past couple of months, as you can see here, which is depositing and buying XEQT and not selling. So I'm never going to have to make that decision. I don't have to worry about that decision. And you can see here, I withdrew. The one time I withdrew was this referral reward that I got into my personal account. I don't want that there. I want it in my TFSA or my RSP. And whenever I got a dividend, I invested it, put it into XEQT right away. Didn't even think about what the price was. So just to tell people that it's really easy. Investing in a one decision ETF is really easy. I sleep easy. I don't have to think about it. The market's tumbling and doesn't really affect me at all. Actually, that's not really accurate. I'm probably going to have to sell for some big purchases, like maybe a car or a house. The point I was trying to make is that I'm not going to think about selling on like some random day or week when the market is either doing really well or really bad. I'll only sell if I have to make a really big purchase. Outside of that, the plan is to grow this account as big and as large as possible, and I'm not freaking out over any stock market volatility. So another con that people say about growth investing is that the gains aren't real until you sell. And I think this whole unrealized and realized gains and losses thing, I can't really make sense of it because, again, I don't think it applies to me. I'm planning to invest for the long haul, and I'm comfortable with thinking about my net worth as fluctuating in value every day. I don't need to lock in gains. That's not important to me, but that might be important psychologically for other people. I just have this long time horizon, and that account will be worth what it's worth in 30, 35 years. And I think this whole concept, this whole talk of unrealized and realized gains, every time I hear someone mention it, they just talk about some things that don't make sense to me. They justify keeping a stock because they haven't lost any money until they've decided to sell it, and maybe that stock is just bad to keep, right? So nothing is real until you buy and sell. And I mean, I'm just comfortable. I look at my WealthSimple account. That's my net worth. I don't feel the need that I need to lock in profits, because the investing journey doesn't end when you sell shares. You have to do something with that money at the end of the day. And hope that enlightens people, and I hope I was able to help anyone with this information, and I'll see you in the next one because it's getting late.